Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Vivek Iyer, and it's a weak Wednesday morning. The Nifty is cracked to levels of 25,100, weighed down by the global risk-off. Asian markets are bleeding. The Nikkei is down more than 4.5%. You've got a near 4% cut coming in on Taiwan. Kospi is down close to about 3%. So there's a clear risk-off, huge sell-off taking place in the global markets, and that's rubbing off on the Indian markets. That said, after a gap-down opening, we haven't lost more ground. So pull up that Nifty intraday chart, and it's still hovering around that 25,100 mark, but firmly in the red. The mid-cap index is too down 0.5%, but the small-cap index is managing a little bit of a green for itself, and so is the Nifty micro-cap index. So despite a near, 300-point plus sell-off in the mid-cap index, the advanced decline ratio is not too bad.
You're absolutely right. We actually came out with what was essentially a very weak set of cues. You saw the US markets fall quite significantly overnight. You saw commodity prices dip significantly. Oil prices were down over 4%, and all the commodities saw a bit of a sell-off. GIFT Nifty was indicating a 200-point gap down, and in line with that, we actually opened quite negatively. Like you mentioned, the one segment of the market that's doing quite well is actually the small cap segment, and the small cap segment actually managed to recover quite significantly. In fact, it's the only pocket of the market that's actually recovered and is now trading in the green. IT stocks are taking a bit of a knock today, so some of the larger names like Mphasis, Wipro now trading in the red. But the big story today is crude oil. Prices have corrected 5% to erase all gains for the year. Manisha Gupta is here with all the details.
Thank you so much for that. Well, yes, as you mentioned, it has been a very sharp decline across commodities, and the crude oil prices really taking it even steeper than others. If you look at the month of July and August, it was a negative months, couple of them, for the crude oil prices, and September has started on a weaker note yet again. So we are 5% down overnight, and that brings us to the 9-month lows. We started this year at around $75 kind of levels. The high for this year has been at around 84.5, and from there we're down at around $73 and still counting on the lower side there. The markets have seen a decline because we're looking at weak China data in sense of manufacturing PMI and the services PMI also. And then OPEC and allies are expected to increase production from the month of October in a gradual way until the month of September, till they have brought out all the voluntary output cuts that they produced. So 180,000 barrels per day of a production increase from OPEC is what we will see from the month of October is weighing onto the markets. And then there seems to be a resolution in sight when it comes to Libya. Those production cuts in the last couple of weeks have also supported crude prices, but now with an expectation that production and exports will be back and to a higher number as well. Because when you look at the previous couple of weeks, the production was at around 959,000, which dropped to 591,000. But when you look at the July production from the Libyan markets, that has been on the higher side to the tune of 1.28 million. So if that kind of supplies are coming into the market, there is pressure that is seen as well. So while the supply has been increasing, the demand clearly has not been picking up. It's not just about the crude oil prices. Gasoline has declined 6% overnight and is trading at a 32-month lows. That is because the U.S. demand for gas in this summer season hasn't been so strong. And that has led to the stocks when it comes to gasoline to a high of 218 million barrels. Not just gasoline, heating oil prices have been under pressure. That one is trading at a 15-month lows, and we've seen 4% of a decline in the previous 1 month. The strength in US dollar index also has been weighing on. So the street from now will watch out for the US non-farm payroll data that comes in on Friday. But the kind of crack that we've seen in crude clearly seems to be supporting the paint companies and, of course, the oil marketing companies as well. It is the oil producing companies which clearly have seen a decline today.
Okay, thank you very much for that. With the sharp decline in crude prices, stocks like Asian Paints, you spoke about paints. Asian Paints is the top gainer. You've got Pidilite also, which is, reacting positively. Berger Paints is another big beneficiary. So paint companies are higher. You've got strength in a couple of these tire names and oil marketing companies led by HPCL, IOC, BPCL. On the way down, though, you've got cuts in ONGC and Oil India. But let's go across now to Sudarshan. Now, Morgan Stanley, in a recent note, highlighted two fundamental and two technical factors that one needs to keep an eye out for that may trigger a stock market correction in India. Sudarshan joins in with the details. Sudarshan.
So there is an interesting note from Ridham Desai of Morgan Stanley about the current Indian market, and he has given the headline of the walls of worry. So what does he talk about? He says there are many sources of correction in this strong bull market, and these sources are both fundamental and technical. But at the same time, he says this does not mean that the bull market is over. We are just halfway mark of this ongoing bull market. Now, what are the sources of correction as per Ridham Desai? He says valuation on its own is never a reason for stocks to correct. Elevated valuations become a catalyst when fundamental and sentiment events unfold. Now, what are the fundamental events that have to be kept eye on? First, potential growth slowdown, that if it happens for the first time since COVID-19. Second, domestic earnings growth will surprise to the downside if global growth slows down. And third, government policies shifting towards redistribution. As far as technical risks are concerned, he says, possibility of retail bid on equities shifting to primary market as equity issuances surge. And second, India and global correlations can change if there is a sharp sell-off outside India. Now, as far as the next leg of trigger for the bull market, he says fiscal consolidation is creating space for private borrowing and spending to fuel the next leg of earnings growth, and rise in equity holdings on household balance sheets supplemented by higher global allocations to Indian stock. As far as preferred picks are concerned, for macro trade, he prefers cyclicals over defensives and large caps over mid and small caps, and he's overweight on financials, technology, consumer discretionary, and industrials.
Thank you so much for that, Sudarshan. A very interesting note over there. Morgan Stanley has also written on banks today, saying it's now time to be selective. Also shares their top picks. Abhishek is here with more details.
While Ridham Desai is betting on financial, on the other hand, their BFSI analyst is not betting on financials. That's a key highlight that I can see from what Sudarshan has said just now. So Morgan Stanley has written on banking sector, time to get selective. Margin as asset quality will normalize in next few years, and this will drive the divergence with respect to profitability based on what the franchise strength is. So large private banks will do better and see higher relative valuation when compared to other banks. So for few selected mid-sized private banks and PSU banks, the profitability could move below cycle averages before NPL cycle turns. So valuation dispersion lessened over the past 3 years. They expect reversal as profitability normalizes. So the key catalyst is regulatory changes and turn in the rate cycle. They say that number one driver is net interest margin, which remains a challenge amongst tight deposit growth and high competition. Loan growth should be divergence across banks, given the fact that excess liquidity is largely being utilized already. So driver number 3 is asset quality would normalize amongst higher retail NPLs and slower corporate recovery as well. ICICI and Kotak and Axis remains their top pick, while they have downgraded rating on Federal Bank to underweight from equal weight. So with respect to the target price changes done by them, they have increased the target price for Yes Bank by 10 paisa to about 16.6 from 16.5 that they had earlier. Kotak Bank target price has been cut by 10 rupees per share. However, RBL Bank, that's the highest decline with respect to target price being cut. It's cut to 210 from 260, and next cut is on Bank of India being the highest at 110 is the new target price from 125 that they had earlier on the stock. Back to you.
Thank you so much for that, Abhishek. Some moderation as far as the targets are concerned across the banking space from Morgan Stanley. Time now for a short break. On the other side, we will get your key excerpts from our conversation with the top management of Bajaj Housing Finance on their upcoming IPO.
Welcome back. Bajaj Housing Finance's much awaited 6,560 crore IPO will open for subscription on Monday, 9th of September. Now, this issue is a combination of an offer for sale of 3,000 crore rupees, where the promoter Bajaj Finance will be selling their stake, but they're also raising a fresh capital of 3,560 crore rupees. Now, this company is a giant in the housing finance company. They started operations just in 2018, and in a span of 7 years since they started mortgage operations, the company has become the largest non-deposit taking housing finance company in terms of AUM. Its AUM is 97,000 crore rupees. It's coming out with a valuation of nearly 59,000 crore rupees. And it's also been the fastest growing housing finance company over the last 3 years, with a 30% AUM growth CAGR. I caught up with the chairman and non-executive director, Sanjeev Bajaj, and the MD of the company, Atul Jain, to talk about the prospects of the company, the growth trajectory. The conversation started off is your 30% top-line growth sustainable? Listen in.
Let me start by saying that the opportunity for housing in this country, not only because of the way the country has been growing the last decade, but also the additional focus that the government has brought in so that there is housing for all. There is a long way to go. And while we don't target any particular growth number, we've been able to see very strong growth in the last 7 years. And this is on the back of both the opportunity that exists, the capabilities that the management has built, which Atul will talk about a little bit more now, as well as the high quality performance parameters that we've been able to report quarter on quarter. But I'm sure Atul will detail more.
So do you think 30% is sustainable?
Surima, like Sanjeev called out, we do not target a particular number. Of course, the market size is very large. If you look at a housing market itself, let us say home loan market, which is the largest part of a mortgage market, the market by plus some estimates plus minus was 30 lakh crore plus as of EUM in the country. Loan against property 10 lakh crore plus. So the kind of a market size which is there, compared to that, our size, relative size of a 91,000, 97,000 crore as of a 30 June still remains small. More important and relevant part is, leave is the market being very large is one part. This is also growing at a various estimates on the industry at a 13 to 14% kind of a CAGR, which is a very high pace of a growth, and the way forward for the industry as well, given housing focus of the government in the country, given low mortgage to GDP ratio of India compared to even other economies.
Has the competitive intensity come down because HDFC Limited, the giant in the space, has merged with HDFC Bank?
At this point of time, the competitive intensity is still high, and it's not only despite HDFC having merged, but if you look at the overall lending opportunity in the country, the one segment where banks would be traditional lenders in the private capex space for corporates has been slow, though we've started seeing some green shoots there the last few quarters. And in the absence of that, banks have participated in lending for homes because that is the largest retail asset class and one of the safest retail asset classes as well. So yes, so the competitive intensity continues to be there. But on the other hand, you know, what's life if there's not competition? That's what creates some fun.
Now, about 85% of your business is concentrated in a few states. I think Maharashtra, Karnataka, Telangana, New Delhi, etc. Would you look to diversify your geographical presence?
We'll continue to expand gradually to cover from a market coverage point of view. But value-wise, it is going to be concentrated in the way the market is concentrated.
Okay. This is a very competitive space, Sanjeev, and you said that there hasn't been any let-up in terms of the competitive intensity. What, according to you, is the reason why Bajaj Housing Finance has grown so much faster? I was seeing the comparison of your peers. So LIC Housing Finance, the one which is bigger than you, has grown at 8.5%. PNB has actually declined in terms of the growth rates. Canfin Homes is about 15%. What, according to you, is the reason?
There are a combination of factors, Reema. One is a home loan in India is a loan against a home that you're staying in. For most people, it's not an investment property. And hence, to have a housing finance company or a bank that you can trust through the period of your loan becomes important. And we've been fortunate to have the Bajaj brand name. So it helped us start at a good point. Second, the market itself. While the market is competitive, the market is very large. And the challenge as we've built our business, is not so much on the asset side. The challenge is, can you build a large liability book? Can you create confidence amongst your borrowers to be able to build this kind of size? And I believe we've managed to do that so far. And as Atul mentioned, the diversified nature, not only on our asset side, but also on the liability side, not only increase the sources available to us, but also reduce risk through that diversification. And then it's a combination of our insights into customers, it's a combination of leveraging data to understand which micro markets, what kind of product is suitable, what is the right ticket size, what is the right distribution strategy, and then our tech capabilities for quick turnaround times. So the customer will still take a certain amount of time to decide on the home, but everything else, if we can reduce friction in their lives in getting a housing loan from us, we believe that gives us a little bit more advantage than with everybody else. Because the pricing is very much, if you're in the prime segment, if you're in the affordable segment, the pricing is very much similar, because again, this is a long-term expensive loan. And you risk that if you get too much out of the band, you risk adverse selection as well. So this is not so much a game that works on differential pricing. It's on everything else.
So your valuations are about 3 times price to book, which is at a premium to peers. I know this is advised by the bankers and you all go with it, but do you think you've left money on the table?
Our own view is to build a high-quality balanced business and to balance out the requirement both of new and existing shareholders. Eventually, there are a large number of retail shareholders of Bajaj Finance which have promoted this company, and both should benefit, and we think that's what we've done.
Well, a very interesting conversation there with you, Reema. You know, it's a much awaited IPO and all eyes will be on that. On the back of that, you know, there's also a valuation catch-up that you're seeing amongst the listed housing finance peers. So names like LIC Housing Finance, Canfin Homes have been in focus ahead of this much anticipated IPO. But let's now slip into a short break. When we return, we will discuss market technicals with Aditya Agarwal of Invest4Edu and also discuss his top trading bets.
Welcome back. It's the global-facing sectors which are under pressure. So you've got Nifty IT and the Nifty Metal Index taking the biggest brunt of the selling pressure today. Both those indices, the Nifty IT Index is down 1.7% and the Metal Index is showing you a cut of nearly 1%. The other sector which is hurting is the PSU banking sector in general. You know, PSUs, considering the kind of run that we've had, there is a bit of profit booking visible there. Aditya Agarwala from Invest4Edu is now joining in for a technical check on the markets. Aditya, a little bit of a correction that's come in today. Do you anticipate it getting deeper? What is the near-term call on the markets? What are the levels?
Afternoon, Reema. Rather, morning, Reema. Thanks for having the show. I think markets will find its feet closer to about 25,000, 24,900. A bit of cool-off was on cards, to be honest, if you look at the way markets had been behaving yesterday and the last week as well. It was trading in a very narrow band, and this kind of cool-off was on cards on the Nifty, if we talk about, and Bank Nifty on the flip side hadn't performed at all. That had been underperforming big time, and that's still locked in a narrow trading band, Bank Nifty. So if we talk about levels on the Nifty first, I think 25,000 to about 24,900 will act as an immediate support area. Market should find its feet closer to about 24,900, and from there you can again see a bit of a pop in the markets. Markets can again scale back to 25,400 to about 25,500. I believe between this zone of 25,400 to about 24,900, markets will remain range bound. And if we talk about the Bank Nifty, I think somewhere between 51,000 to about 51,200 is where Bank Nifty could find its support areas, and on the upside, clearly 51,500 to about 51,700 is the resistance area. So both on the Nifty and the Bank Nifty, I think markets will remain range bound, and you won't see too much of a move on the upside or on the downside. Having said that, it's the broader markets which might see some bit of a cool off because of clearly the way that the broader markets had run up, both the mid cap and the small cap end of the markets, especially the mid cap, I think can cool off from here on. So the investors and the traders community should remain little cautious as far as the broader markets are concerned, because there I think there could be some more correction, and that could be gradual one, which can hurt the investors more predominantly. So that is one area which I think one should clearly be little watchful about.
Aditya, so mid-cap and small-cap space is where you're a little watchful on. But which are your top individual picks for the day? Any buy or sell calls today?
I've got a couple of buy recommendations because clearly, despite the fact that the markets are a bit 150 point down, still there are pockets which are outperforming. And within that pocket, I've got a couple of buy recommendations. The chemical space is still looking very interesting to me. So Deepak Nitrite is something which I've picked up for our viewers. I think at current level, it makes an excellent buy for a target of 3,200 on the upside with a stop loss at 2,900 on the downside. Can be bought for a day trade or can be bought for a week or so. The second is India Mart. Again, after a good consolidation, stock is showing signs of a breakout on the charts. At current levels, one can go ahead and buy. Volumes are here excellent. So 3,300 will be the target and 3,000 on the downside will be a stop loss.
Thank you very much for that. Vivek, CESC is also, one of the stocks which is in focus. Why is that?
Well, very interesting. For a very long time, the company has been asking the West Bengal regulator, and we are talking about CESC's Discom arm, which is the distribution company which supplies part of the Kolkata circle. For a long time, the company has been asking for a tariff hike for the power prices in this particular circle. But, there's a slight disappointment that has come through. The West Bengal Electricity Regulatory Commission, that is WBERC, has actually gone ahead and maintained the status quo as far as the tariff is concerned for FY25. So the level of the tariff is the same as it was in FY24 as well as FY23. Along with that, the order also indicates that differences up to the month of issue of the order, so the order was issued in September, shall be subject to truing up or increasing during the fuel and power purchase cost adjustment as well as the annual performance review. Now remember, the reason we are talking about this particular development is the fact that CESC recently had a positive development where the company was allowed to go ahead and increase prices or increase tariffs, where the company was able to go ahead and recover some of the additional fuel costs, which is basically the variable cost. But the bigger ask of the company, of course, was increasing the main tariff itself, which hasn't come through. A sentiment negative as far as CESC was concerned, but analysts were anticipating, analysts were hopeful that there would be a tariff hike. It hasn't come through, so slight disappointment as far as CESC is concerned.
Interesting. We will slip into a short break on that note. We'll come back and discuss market fundamentals. We'll invite Sunny Agrawal of SBI Securities.
Welcome back to Trading Hour. Just a couple of minutes ago, you saw on your screen, an important development as far as soda ash prices were concerned. Remember, the two listed players in India that have direct exposure as far as soda ash is concerned are Tata Chemicals as well as GHCL. What we understand is that, soda ash prices have now slipped to multi-year lows, and China's soda ash price has actually fallen down 6% in the last 3 days and almost 14% in the last 1 month. This bodes relatively negative as far as the prospects of both Tata Chemicals soda ash business is concerned as well as GHCL. And at the back of that, you're seeing both of the stocks react quite negatively to the flashes you just saw on your screen. But moving on, Sunny Agrawal from SBI Securities joins us now to discuss market fundamentals and its top sectoral picks. Good morning, Sunny. Thank you so much for joining us. First up, how are you? What are you making of the market currently? And recently, we believe you initiated coverage on AB Capital. So what is your view on the financial space and especially on AB Capital?
Good morning and thanks for having me on the show, Vivek. So in terms of market, I think Nifty is trading close to 22 times 1 year forward earning. But having said that, we are looking at many individual stock ideas where there is a decent upside, especially in terms of earning growth. So recently we have initiated, so we are constructing on NBFC, non-banking financial services company. And the reason being that as we are approaching the rate cut cycle, we believe NBFC are the first set which will benefit out of that. And looking into that, we have initiated coverage on AB Capital. And what we believe is that in AB Capital, both NBFC as well as housing finance business, both are likely to grow their AUM by 25 to 30% over the period of FY24 to 26. At the same time, their AMC business, that is asset management business, continue to do well. They have recovered some lost market share on SIP side. So our sum of the part SOTP target is 280 rupees, wherein we have ascribed value of 190 rupees to the NBFC business, 34 rupees to AMC business, 40 rupees to life insurance business, and rupees 15 to others. So SOTP comes to close to 280 rupees, and the current market price is close to 225 range. So yeah, AB Capital is one of our top pick on NBFC side.
280 is the target price there. You know, I was looking at your post Q1 analysis, and there's one stock which you've recommended, and that's called Sky Gold. That's not a stock that we often talk about. So can you tell us a little bit about this company, Sky Gold, and why you like it?
So coming to the Sky Gold, they are one of the leading B2B design manufacturing gold jewelry player. And they cater to many marquee brands like Malabar Gold, Joya Lucas, Kalyan, GRT, Senco. And what has happened that because of the shift from unorganized to organized in the sector in the jewelry space, we are seeing a very good demand traction in all the branded jewelry space. And the benefit of the same is being seen in the Sky Gold. And recently we have seen Sky Gold has acquired two Mumbai-based company that will again add a lot of value to the company over the period of next 2 years. So growing very aggressively. So what we believe is that during FY24, company has posted revenue of close to 1750 crore, and we expect that to go to 3200 crore in FY25. Margins will expand from 4.4% in FY24 to 5% in FY25. And profit is likely to go up almost 1.5x from 40 crore in FY24 to 105 crore in FY25. So trading at close to 30-35 times price to earning multiple, and return ratios of more than 25%. So a small player, although, but again, a proxy player on increasing demand in the organized jewelry space.
Sunny, very interesting. Sunny, you also have coverage as far as the structural steel tube market in India is concerned. Of course, one of the larger players is APL Apollo Tubes, but you've also recently initiated coverage on high-tech pipes. So first up, talk to us about the sector, what are the prospects there, and then, drill down to your opinion as far as high-tech pipes is concerned.
Yeah, coming to structural steel tube industry, we believe that this sector is having a strong tailwind backed by the Jal Jeevan Mission infrastructure, solar, and so on and so forth. And at the same time, we are seeing all the players, whether it is the market leaders like APL, Apollo, or smaller players like high-tech pipes benefiting out of that. So what is happening is that in this entire sector, all the players, whether it is a market leader or a smaller player, they are expanding capacity. And at the same time, the product mix is shifting towards the value-added product, leading to the expansion in EBITDA margin, or what we say EBITDA per ton. So coming specifically to high-tech pipe, high-tech pipe was having a capacity of 0.58 million ton in FY23. So that has expanded to 0.75 in FY24. That will again further expand to 1 million ton in FY25. And recently, company has announced that they will further expand that capacity to 2 million ton over the period of post FY26. So kind of a 4x jump in capacity in 4 years for high-tech pipe. And what we believe is that company has reported 44 crore PAT in FY23, and that is likely to go to 140 crore in FY26. At the same time, ROE, which is in single digit at a current juncture, may go to close to 17 to 18% in FY26. Currently, the market cap is close to 3,000 crore, and although as per our report, we have achieved our target price was 190, and stock is trading above that. But what we believe is that in the medium to long term, the prospect continue to remain healthy for a high-tech pipe. And so as for APL Apollo Tubes also, wherein we have seen a record quarterly sales volume during the first quarter of FY25. And for full year, we are expecting 3.2 million ton of volume, and that is likely to grow by 20% over the period of next 2 years. Again, the similar story of value-added product leading to margin expansion. Profit likely to go from 770 crore in FY24 to 1450 crore in FY26, 20% plus ROE, ROC. The majority of the capex is behind for APL Apollo Tube, and we will see a rapid increase in free cash flow from FY25 and 26. So that's another pick from structural steel tube industry.
Sunny, what's your view as far as the entire defense space is concerned? We've actually seen quite a lot of order wins yesterday. You saw the Defense Acquisition Council go ahead and approve orders worth over 1 lakh crore. Within that, what is your top pick? And do you feel that in certain cases, the stock price run-up has been much ahead of what the fundamental earnings delivery has been?
Yeah, so after a long time, we have again started seeing order inflows for the entire defense sector. And there is no doubt that definitely valuation landscape has changed significantly over the period of last 6 to 24 months. And all the PSU companies which were trading in a single digit price to earning multiple, they are now trading in the band of 30 to 50 price to earning multiple. So yes, definitely was first round of re-rating has completed in the entire defense sector. Now it's a time for delivery. We have already seen valuation running ahead of the numbers, and I hope that execution is something which we will see over the period of next 18 months. Coming to, however, we continue to remain bullish on defense sector and would like to ride this sector through a smaller companies like Zen Technologies, wherein the market cap is close to 15,000 crore. We have recently seen the company has successfully concluded its QIP. And sitting on a robust order book close to 1,200 crore order book, which is 2.5 times FY24 sales. Recently launched anti-drone solutions and robots. So we are expecting close to 1,200 crore of fresh order inflow for the company. And at the same time, we expect sales, profit and top line to grow by almost 3x in FY during the next 2 years. So we are expecting close to 1,300 crore top line and 338 crore profit in FY26. Company is clocking close to 40% ROE, ROC. So I think smaller size company like Zen Technologies is our preferred bet as far as defense sector is concerned.
Thank you, Sunny. Great conversation on these, individual stocks. We will slip into a very short break on that note. On the other side, we'll get a corporate conversation going. Now, BLS International has made an interesting acquisition. It's a small acquisition, but they are getting in. They've bought a company with a 51% stake in a sports management company, which gives them entry into golfing events. Shikhar Agarwal, joint MD of the company, joins in on the other side. Welcome back. BLS International now last night signed a definitive agreement to acquire a 51% stake in SLW Media. Now, SLW Media is a sports management company. It has more than 2 decades of experience in the golf industry. Now, the company says it's a strategic move because it will help them tap into the growing sports and leisure sector. Also, it will help position the company for significant expansion and diversification. So the company's goal appears to be creating a one-stop solution for luxury experiences for HNIs, corporate clients and government officials. To talk more about it, we have with us Shikhar Agarwal, the joint MD of BLS International Services. Thank you very much for joining in, Shikhar. This is Rima here. So first, just tell us, what is the aspiration of the company? Because this appears to be, an offbeat track, different from what the core competencies of the company are.
So, Rima, basically, this acquisition that we have done 51% is basically to enhance the brand equity of BLS International. A lot of our clients, the governments, ambassadors, diplomats, they all play golf globally. And even our clients, HNIs and different people, they actually are associated with the game of golf. So if you see, it's a very minute investment of 81 lakhs that we have done. It's basically this company does 50 odd golf events across the world. So our aim is to enhance the BLS brand equity, BLS International brand name. And that was the major objective of becoming part of this company. And as we speak, we are conducting multiple golf tournaments across India, across the world. We want a lot of Indians to go abroad, experience, the BLS brand name, a lot of foreigners to come into India to enhance the Indian brand image. So that was the objective, majorly to enhance the BLS brand equity. But this is a very minor investment of 81 lakh, and this will not entail any major investment from the company.
So would you look to increase your holding, or 51% is it in terms of a stake purchase? And why do it under BLS International? Why not do it in your personal capacity? Because it's not a sizable investment, as you said.
Correct. So basically, see, this is not done from an investment point. This is just done to enhance the BLS brand equity. All the tournaments that will be held under BLS brand name. A lot of diplomats, ambassadors will be invited to different events. Different governments across the world will be invited. So that was the major objective of starting this company.
Are there any other steps that you would take to enhance the brand equity of the company, the image?
Yes. So this, associating with the game of sport of golf, really, is aligned with our business objective. Going forward, we might, conduct different sports, get into other sports as well. But right now, golf is where we feel that BLS brand name, can be really associated with. We did some tennis, and cricket also in last 1-2 years. That also we invited our client governments, our customers to the matches, etc. So this is also one of those objectives. But as we said, it's a very minor investment and will enhance BLS brand equity.
Okay, Shikhar, moving on, talking about the core business itself, Q2 generally, if you understand it right, is a strong quarter, seasonally strong quarter for your company. So how have volumes panned out so far? And also last time we spoke to you, you did mention that in certain segments you might be looking at price hikes. So have realizations for you improved, volumes as well as realizations? How have they panned out in Q2 so far?
See, if you see our first quarter, we did a profit of 120 crores, which was a 70% growth compared to similar quarter last year. And if you see the volumes, we did 8.5 lakh visa volume, in the first quarter, which was an 18% volume growth. Definitely, our margins have also expanded. It is now 27.5% EBITDA margins that we are doing from 21%. So going forward, we definitely expect margins even going up further. The acquisitions that we did, iData, etc., those numbers have not been added in the first quarter. So we expect some of those numbers to come from the second quarter itself. Margins in iData are much higher than BLS International. So the margins of the combined entity will definitely go up. If you see, our visa volumes are also going up. Also, in many countries, we have shifted from partner-led models to our own entities. So that has also led to an increase in EBITDA margins and profitability. So we continue to see growth in this quarter as well, in the coming quarters, in the coming years, with this acquisition, with the new contracts that we have won and multiple contracts that we are eyeing.
Shikhar, you spoke about, iData, and you said that there will be, the financial numbers will be incorporated into the company from Q2 onwards. So what will be the contribution from iData as far as Q2 is concerned, and what is the margin profile of that particular portfolio? Does it match the BLS International core portfolio?
See, the audited last year calendar year numbers of iData, they follow calendar year 2000. They did a revenue of around 300 crores and an EBITDA of 150 crores. So we expect to maintain, maybe maintain those numbers. And definitely EBITDA margins in iData are much more. They are upwards of 40% since it's a niche player in specific geographies of the world. So that will definitely add to our EBITDA margins of us. And we will, we are in the process of combining some offices across the world that will lead to reduction of expenses for us and will also give us an increase in EBITDA margins.
So far in Q2, Shikhar, what are the visa volumes, the growth?
I exactly don't know the numbers of Q2 because we still have to close the quarter. But first quarter, we did 8.5 lakh application, which was a growth of 18% compared to first quarter last year. And we expect the growth momentum to continue.
Shikhar, can you leave us with the guidance that you have set internally for yourself? Top line, EBITDA margin, as well as PAT for FY25?
Definitely, if you see last 4 years, we have done a 90% CAGR growth in terms of EBITDA and 72% CAGR growth in terms of profit in the last 4 years. And, as the base becomes bigger, we expect that the growth should also continue. eyeing multiple geographies. First quarter itself this year, we have done 70% growth compared to similar quarter last year. We expect the growth momentum to continue as we eye the consolidation of numbers of our acquisitions that we have done, as we deploy more contracts around the world, and as we change our model from partner-led model to our own. I feel that we can continue the growth momentum that we have achieved in first quarter.
Thanks so much for that, Shikhar. So you're expecting growth, but given the high base, there could be a certain moderation as far as the growth numbers themselves are concerned. Thank you so much for your time. Time now for a short break. We'll get you more on the market as well as stock-specific action on the other side. Welcome back to Trading Hour. Another stock in focus is Godfrey Phillips. The company has finalized the sale of its retail business to a startup called New Shop. Sources have said that the term sheet has been signed to transfer 24/7 stores and the transaction will be completed this month. Ashmit Patel joins us now with the details. Ashmit, please take us through the detailed deal contours.
Well, an important development this coming in from Godfrey Phillips, especially ahead of the September 6th AGM. What we've learned, what sources tell us, is that the company has finalized its plan for sale of its retail business 24/7. The format, 24/7 format stores will now be sold by Godfrey Phillips. Those plans have been finalized. Importantly, it's being sold to a startup, the Delhi-based startup, the New Store. The New Store essentially already is in the convenience store business, has about 160 stores across 35 cities. That will be the company taking this forward. Now, what's important is that the term sheet importantly has been signed. The talks have been underway for a very long period. The term sheet importantly has been signed, which signifies, of course, forward movement in terms of when this transaction is to be closed, in terms of timelines. Both the parties are keen on moving aggressively and closing this transaction as soon as possible. The timeline that we hear, that they tell us, is the end of September is when they're looking to close this transaction. And in the spirit of wanting to close this transaction, what we also pick up from sources is that there are efforts already underway by both sides for beginning to transfer the stores and the assets of 24/7 to New Store. So a hugely important development this, especially in light of the promoter dispute which is underway as far as the boardroom is concerned. The reason being that the executive director, Samir Modi, has been steadfast in his opposition to the sale of 24/7, the retail business. Beena Modi, of course, and the other board members, the broader board members, are in agreement with the sale of the retail business. So there is some amount of underplay there, some amount of undercurrent there. We'll, of course, see all of it play out at the AGM on September 6th.
Thanks so much for that, Ashmit. Remember earlier last week, Ashmit had caught up with Samir Modi, the ED of Godfrey Phillips. Let's listen in to what he had to say on the retail business.
Well, the retail division was created on the behest of my father. My father wanted to create an alternate, just like ITC, saying that GPI should have an alternate channel. And while he was alive, we had approved a budget infusion of 400 crores as per a BIN report that we had engaged them in. That never got implemented. And the retail business was there as a solid business. We started to make money. So to shut it down the way they did was not in shareholder interest. If we had to hive it off, we could have sold it. But to shut it down and make a loss for a shareholder is, in my view, a judgment not taken well.
Well, very interesting conversation and a very interesting deal as far as Godfrey Phillips is concerned. But with that, it's a wrap on Trading Hour. Stay tuned. Halftime report is up next.